And I reported it saying that, someone's acting like me, and they're like, we don't see anyone, like, misusing our guidelines or whatever it is that they said.
So you that one person, you told them like you could find their IP address or something.
Yeah.
Okay, that's kind of what I said to him. I took your line.
Yeah.
Um, okay, let's see what we got. Morning, good morning. What's up, guys? All right, we're gonna do a quick breakdown. Obviously, we got CPI today. Nothing much has changed on GJ. We actually were just able to grab 12 pips on it. But other than that, it's been kind of rangy for the week. And as you can see here on the monthly and the weekly, you can see that we've been sitting in a range as well. I have my historical levels marked off. Are we on YouTube, Sharma?
Yes, we are.
All right, awesome. So we have our historical levels marked off: 149, 156, 158, 160, and 168, 100. That previous support over here to the left that we've been rejecting. Um, Also, the bullish trend we've been in since COVID, we're kind of in that corrective state, just like we were over here before price continues up. Unless we get a major recession in Great Britain, then that could be the opposite. But looking at the weekly now, again, I'm going to try to do a quick breakdown for you before CPI. Weekly, again, weekly ended up rejecting that 161 level, or no, with 159, 160 level over here, and then closing above. You'll be able to see it on the lower time frames over here. But we ended up getting a strong rejection on the weekly. The next candle created a bottom wick, flipped bullish, and right now this candle's kind of been like almost like a doji all week. Right now it was a doji, and now it's starting to push up a little bit. But if you look at the daily now, daily we could start marking off these lower highs we've been respecting. You can mark off 166 right here that we keep rejecting. Right over here to the left, rejected it for the last time. And then here's that support I was just talking about. Previous resistance. Drag that over to the left. And what you ended up getting was the rejection from 166. Price pushed all the way down. Rejected, held support with the first bullish candle. This candle ended up closing bullish, respecting the low. This candle ended up closing bearish, but created that top wick over there, followed by a very strong bullish candle right here, respecting the low. Right, so holding that support. Now we're getting these weak bullish candles, slowly respecting this previous resistance, holding support here and pushing up. Right, all these lows are being respected. So can we continue up from here towards like that 164 level to fill this wick? Looking at the daily, daily's been in that bullish trend. At that resistance marked off over here, we keep rejecting it. You drag that to the left as well. But since tapping off of 160 here, we've been making higher lows and higher highs. And we just got done bouncing off of a very key level over here where we're holding support after creating this higher low down here. And we created this higher low over here as well. So right now we were kind of consolidating. We got this strong 4-hour close. Bottom wick respected it. Bounced off a key level, previous trend line and support. And now we're bouncing off, breaking the highs over here and continuing up. So now looking at the 1 hour, this is a big range, right? This whole thing right here, as you guys know, is a range. So like, is it worth trading in there? Maybe. You gotta find certain setups, and you really, if you're gonna trade in this, you gotta lower your risk. But what we saw over here right now is a very key level around 163, holding as a support, and then again getting this key level bounced off of. When you get this bullish candle close, bouncing off that area, you get a little retest, holding support in this area. This candle grabs liquidity, flips bullish, and closes a strong bullish candle right in that area. Right, so you have that resistance right over here that price really closed at. So what we were looking at here on the 1 hour, and this was taken based on the 1 hour, was following this candle close, wait for the bottom wick, passes the high of that candle, and we take this as it passes the high of the previous candle, fills that wick, and it ends up pushing up 10 pips where my stop loss was, and I just closed the full thing at 12 pips. It pushed a little bit farther than where I planned, which is never a bad thing. But I actually want to, before we move into this, I'm just going to go over to my original chart over here and just mark this off so I have it for the journal and I can break it down for you guys later. And then that guy can copy my Instagram and that'll be cool too. Alright. Oh no, it was 12 pips we got. Alright, Quentin? Quentin, grab this one too. So I actually ended up closing half of it when it came into drawdown a little bit, just because we have CPI coming out, and I was just following my rules. I think I was micromanaging it a little bit, to be honest with you, because I haven't taken a trade yet this week. So with us having CPI coming out, you know, I was just kind of trying to make sure like I was being a little bit more conservative with price coming back down to this area. We could possibly have gotten that retracement. It pushed 7 pips in my direction anyway, and then passed the high of this 30-minute candle right away, and then retraced, right? And then it came all the way back down into this area. So I just closed 50%, never added risk back on, just because, again, it's a very messy area on the higher time frames. Let me just do this for... Does that make sense to everyone?
Yes, sir.
I haven't opened the chat yet. I see we have a few things in there. Wow, look at that tank. Quinn, you closed the full thing, right?
Yeah, I closed the last 25% of my position at 14 pips.
And this, I've seen this happen many times here. This is why we... Did CPI already come out? What the hell's going on? But that's why, yeah, no, 8:30. So this is why I was trying to manage risk over here, right? I was really looking at the 5 and the 1 minute as price was like breaking structure over here. We were starting to break structure over here, and that's where I ended up closing 50%. Just because like I knew we could possibly get the retest coming down into this area and continuing up possibly, but or we could continue back down here and then get like a little fake out to continue up. And I don't want to be stopped out. I only risked 1% on this, so it wasn't much. Yeah, did I kind of micromanage that? Absolutely. But at the same time, I'm happy with it. It's not that big of a deal. Still get 12 pips with 0.5%. It made up for any loss. Yeah. Okay, so back over here. So GJ, we're really just sitting in the range now. Now that we just rejected this area over here, I would just kind of stay out of GJ for now unless we get a perfect retest of this area. But I think that was kind of like that move. Unless, you know, again, CPI can push us pretty hard. We'll see how the yen reacts to it. But we'll see if we get some kind of a support here formed and then price continues up. Or if price breaks 163 over here, we're now breaking the trend. And you could possibly take this move here. But once you get this, you get a clean move at least down into this area. But also a clean move coming all the way down into here. Right? And then 161, 200. All right, so that might be your better option to trade, but this could be a move as well. All right, gold. Gold is interesting right now because if we get a really big surprise number, typically inflation, right? Typically, when you get high inflation numbers, it's going to push gold up. And whenever there's inflation, you're going to get a nice move up on gold. But at the same time, we're in a phase of monetary policy tightening. So, you know, that we could just be getting a pullback over here to continue back down. But we're sitting in a very interesting area that I was pointing out to the group before, where everything pretty much looks identical to what happened between 2008 and 2013. right? Same kind of price action where now we're expecting something like this, right? With tightening monetary policy. But at the same time, we were in a much better spot in 2012 and 2013, getting out of a recession, right? And prices were recovering at that point. Right now, we're just kind of entering a recession, right? So could we have bounced off of 1680 for the last time over here? All the rate hikes were priced in. They didn't do much, and now all of a sudden we start to enter a recession. Everyone gets fearful and pushes gold right back up. It could happen. So today's going to be interesting when it comes to the inflation reading. Looking at the weekly over here, again, I've been playing around with this trend line over here. I could see it making sense multiple ways. Tapping in multiple wicks over here, and then tapping off of 1680, and just, making higher lows and higher highs. But right now, the most important thing is your levels. 1680 right here, right? Very key level. Price closed above 1750. Previous major support of this consolidation. Now we're sitting back into this consolidation, slowly working our way back up. You have 1830 over here, another very key area, the resistance of that consolidation. But right now, we just broke through a major demand area as well that we'll see on the daily. Like to draw like a horizontal line around, 1786, which if you look over here, actually first let me just mark off this trend line we've been respecting. We finally broke out of, and now we're like sitting in like a key level since 1680 right here, printing higher lows and higher highs. But right now what you ended up getting was this strong bullish candle close. We come down, hold the support in here with a bullish candle close, bottom wick form. We passed the high of all these candles right here, right? And we actually held support in that 1786 area. This candle right now is creating a bottom wick. Are we going to flip bullish and continue up, right? Can we continue up into this level right here, previous support, right? And we could very well continue back up to 1830 as well. Daily or 4 hour. The 4 hour gets interesting. We keep rejecting this level right here. Resistance over here. See if we can drag that to the left. I'm sure you can. But right now, the most important thing is that it's our resistance right now. And then we have our support right down here. And that's that area I was just talking about. Like that 86 level, 1786. Now, what we ended up just getting on the 4 hour was a bullish candle close. This candle created a bottom wick, passed the high, already retested that level. Looking at the 1 hour, we got the rejection this morning. This is that level I was just pointing out. We got this rejection this morning, but price is holding that higher low that we were talking about this morning. Strong bullish candle close. Where are we going to go? We're basically consolidating before CPI. So what could we be expecting fundamentally when it comes to a surprise number? I don't want to trade anything in here. I want to see where price pushes out of. I could see somebody placing a buy stop above this level or a sell stop below 1786 over here, or even before that, right in here, but that'd be a little bit tighter. But I'm going to be personally trading the reaction to the news, so we'll see what we end up getting when the news comes out. Let's see the chat. All right, so KB, all good, BJ. Looking for some gold interest today. If CPI comes out lower, I'm expecting a straight drop. But if we have higher than forecasted, I'm looking for buys. Okay. Awesome, KB.
Yeah, I was looking at Forex Factory in the news section, and it says that there are reports of inflation kind of easing down. So that's pretty much what the market is trying to price in right now. It's just the market sentiment that's just been put out.
Okay. Was that on the news?
Yeah, in the news section, if you go all the way down. Over there, yeah. Critical inflation report, just go right back up. No, go right back up.
Right here?
Latest news and stories. Right next to that. Yep.
Inflation, okay. CNBC. Inflation may be finally cooling. Let's hope. All right. Pretty good. That would be perceived as good news in the markets where investors are watching the CPI for clues. See, today is the biggest, I would say, economic data point coming out this week. We have some more to follow, but this is what the markets have been waiting for, and that's why hopefully you guys haven't been taking too many trades in the beginning of this week. There hasn't been that many moves coming out, but we have PPI coming out just as important as CPI because it directly affects it. Right? If producers' prices are rising, we're eventually going to be feeling it as well. So we'll see what theirs are at. Right now, they're only expecting 0.2% right here. So we'll see what ends up coming out because the previous was over 1% here. So we shall see. 818. Sharma, is there anything you wanted to add?
Nope, we're just waiting for CPI, so just wait for the number to come out, and then trade the reaction to it. The last couple of times we've been able to trade before CPI, so actually trade the market sentiment and then kind of, carry that out because we have been able to predict that there are increases in CPI. And now there's a sentiment that we're decreasing, so the forecast that we have is 0.2% from 1.3%, which is previous. That's still a massive drop. So if it does come out to the target or lower than that, then I do expect gold, for example, to drop down, like some optimism to kick in. But if it's anything in between that, then I do expect price to create some wick rejections and things like that, breaking the highs and lows as it always does, but eventually come back into consolidation.
Absolutely. What was the last PCE? Week before, right? The end of the month. Yeah, right here. Yeah, so PCE rose month to month over here. So we'll see.
Can I go ahead and break down US 30 as well if you want to bring that up on the chart?
I'll stop my share.
Alright. Give me 1 second.
Tim Cuddy.
Can you allow sharing?
Oh yeah. London was chalked. I like that.
Alright, let's go over the higher time frames and down real quick. If you guys have any questions, just stop me and then ask. So monthly, we're going to go over the most obvious support that price has created last month, which is that 30,700 mark. And then I'm going to mark off right around this area where price has created this little support, and we try to push back down. We're tapping into it currently as well, which is at 30,000 mark. So if price taps into 30,000, we know that this is more like a test of structure. But if price pushes above this 33,000, then give me 1 second. Then we know that we're going to come right back into this consolidation. This is where the optimism and all that stuff is, right? We had a lot of uncertainty around this time in the beginning of the year because it was a lot of discussions around interest rate hikes and everything. And then once we started getting those actual interest rate hikes, that's when we came back down into this 30,700 mark. And then now, there's discussions about potential recessions. Is there going to be, what's the monetary policy shift going to be? And then right now you have this Inflation Reduction Act that the Senate passed over to the House. So there's a lot of uncertainty, and we're coming right back into this area of liquidity. So it's very crucial to watch out, what's going to end up happening at these levels. So this is where the fundamentals kick in. You come on to the weekly time frame, and you see that how price has held onto a support right into the zone. We're kind of tapping into it at the moment, so it's very important to wait for price and fundamentals to line up and then look for your trade opportunity. So this is your entire bearish trend. This is pretty much where you're testing your structure. If price breaks above this 33,000 mark, all you need is a break and retest, and you can look for buys coming right back up into the zone, starting off with, first target being around 34,800, and then, those minor levels up top there. And then eventually, do we have enough optimism to break those all-time highs? As of right now, I don't think we have the optimism for that, especially as we're pretty much printing more money. And then we're also injecting more money into the economy through this Inflation Act. And, there's a lot of fundamentals that are not pointing towards a very good outlook. You come onto the daily time frames, the same thing. You've seen how price reacts into this area multiple times, a lot of consolidations, and then meltdowns happening. So what I would do is narrow in my zone even more and on the daily time frame, and then we can see how the exact consolidation is really happening right between this range. So right between this range is going to be more like my no trade range when we drop down to lower time frames. So I would not be looking for any trade opportunity really between 33,000 and this little support zone that's being formed. Anything in between is a no trade range. It's just a ton of consolidation that's going on. So if price breaks below this bullish structure that we have forming, so if price breaks below this zone, then we could look for potential sells coming back down to this 4-hour support, and then after that, target some of these minor levels as you keep coming back down into this 30,700 mark. For any buy opportunities, we need price to break above this 33,000 mark, so then we can look for buys coming right up top into this 33,000 around 200, and then eventually coming up for around 33,400, and then kind of make your way up as you look to the left. So as of right now, you're consolidating at a very key level when it comes to the monthly time frame, weekly, daily, 4-hour. You come down to the 1 hour, still very messy, so just wait for price to break in one direction or another. I don't think there's going to be a massive drop happening here when it comes to CPI. We could probably see price pushing up with some more optimism, probably price pushing back up into this 33,000 mark, but at least now we're kind of closer to one level being broken. So just be patient when it comes to US 30.
Beautiful.
Alright, I'm going to pass it over to you now. Go for it.
Alright. Just actually going to go over to Financial Juice. Let's see what we got here.
We've got about 6 minutes before CPI comes out.
Aman, I'm doing great, man. How about yourself? About 6 minutes. How's everyone doing so far this week? Anyone take anything or kind of been sitting out and waiting?
Yeah, I've just been sitting out and watching, waiting for movements today.
Yeah, it's been very slow this week. There was one trade we could have gotten. I actually journaled it and put it in the group Trello on GJ yesterday that I didn't take just because of the range we were sitting in, but it would have been a quick 14 pips based on a candle body close. As you can see, the 4 hour is kind of messy over here. We're sitting in the same spot we were a few days ago, but we ended up getting a high created, support formed over here. And once you get this high created, I was waiting for the next candle after this candle closed, waiting for the next candle to create a bottom wick and pass the high of that candle. So that's why I didn't enter it, because we never got that bottom wick. It passed the high right away. But we could have entered after this candle closed. I was just kind of set and not taking a trade really until CPI because we didn't really get anything so far this week. But that would have been a quick 80% at 14 pips, 1-to-1, stop loss at break even. And then I would have been stopped at break even. And as you see, what would have happened after that. So this really is why we didn't really take that trade, because a lot of this could end up happening, and we knew that. So, but this is what you guys want to do when you're either sitting at the charts and not taking anything, or or you miss any kind of trade, you gotta journal the trade and go back and analyze it and see what you could have done to take that trade. I was watching an interview yesterday. I was talking to my group about this morning. Robert Saleh, the head coach of the Jets, is getting interviewed by the NFL Network, and they're asking him why they think Zach Wilson, the second-year quarterback, is going to have a successful season. Like, what are they seeing? Oh wow, what are they seeing with his progress and why they think he's doing so well? And they said with his leadership, stuff like that, but the main thing is that he's been noticing is that he can throw a pick or he can, do something wrong or throw the wrong route or something like that and know exactly what he did wrong before coming to the sideline, and he could tell the coaches what he did wrong. Now, that doesn't really happen too often with beginning quarterbacks. Like, they need to be coached up on a lot of these things. He already knows what he's doing wrong. And that's a big sign of being great. That's a big sign of the special ones in these leagues, whether it's the NBA, NFL. They know exactly what they're doing wrong, and they correct it right away. So that's where you guys need to be head-wise or mindset-wise, where you need to be able to correct what you did wrong. You need to be able to catch what you missed, all that stuff. Have that same exact mindset, because that's a sign of being special. Just started trading Bitcoin since last week. Been doing good. All right, nice. Got in yesterday in GJ at 30 minutes after London Open. Yeah, the London Open move, I think, was good from that key area. I believe it was right here, right? And at the time, you could have technically been drawing your trend line almost like that. It would have been a little off, but the main thing was not really the trend line, but the higher low being formed here, right? Is this where you caught it? Strong 30-minute candle close right here.
Yeah, that was the one. Just 30 minutes after the London opened. I took that just trying to retest the previous resistance before pre-London.
Beautiful, man. You got the support here, and then you're getting higher lows being formed over here. Get a nice rejection. You get this one candle close, right? And you're anticipating prices bouncing up with the London volume. You took advantage of that. How many pips you grabbed?
It was just 13, so I was targeting the previous resistance made, and then my entry was on the candle close.
Nice.
Yeah.
And your stop loss was below this candle?
Yeah, it was, below the previous 30.
19, so you got a little bit more than 1-to-1.
Yeah, it was a bit tight, but that's like a bit of a shot.
Great job. So with that being said, what would you have done different? Anything? Would you have held something?
Could maybe have held the runner, yeah. Because it was ranging quite a bit, I was just quite happy to take like a 1-to-1.
Sure. Yeah, no, 100%. You're not getting greedy.
Yeah.
Wow. What kind of number did we get? Don't get FOMO right now. Just wait. Let's see what we got. Wow, good stuff. Inflation is easing.
All right, there you go. So this is, we missed the expectation. Came much below that. So this is where I would expect, a lot of volatility. So I wouldn't be getting into gold right now, or like any pair right now. Obviously, it's going to react heavy. Give it a couple of minutes. You don't want to be a part of, a top wick or a bottom wick rejection or anything like that. Just wait and give it a couple of minutes.
The 4-hour looks great. We ended up closing here. Yeah. Bottom wick forms past the high, and we've just been, fill that wick continuing up from here. So that's interesting. So it's like I feel like either way it could have gone up, right? Because obviously inflation, high inflation, people are going to buy gold, but at the same time, with good inflation, or not good inflation, but easing inflation, that means that the Fed can kind of ease on monetary policy a little bit and push gold back up again. Right?
Yeah, so essentially that would be more like, easing up on the interest rate hikes. So maybe not increasing, by another 75 base point hikes, or 0.5 base point hike. It's more going to be like, a quarterly one, or just keeping it at the level that we're at the moment.
Absolutely. GJ tanked.
Just where like we pretty much drop down to the 5-minute time frame, and then you wait for price to candles to close, and you see the wick rejections, you see the volatility and everything like that.
That's this chart up here. Chart down 5. All right, let's see if we get a solid move this morning. Oof.
Let me check up on US 30 real quick too.
Yes.
Yeah, that pushed hard to above that 33,000 mark. Yeah.
Sure, a lot of people are happy right now with that. Everyone's 401ks.
Pushing up.
Yeah. It's good for them. We're still on the downtrend.
Yep.
And this could be our pullback coming up into these levels on the daily.
Yeah, that's pretty much, this entire consolidation to the left on this daily time frame is your Tesla structure. So if you break above that, you got those clean buys to the left. There's nothing really stopping you from going up to that 34,000 mark and 35.
That'd be great for the economy. Bitcoin also reacted. Yeah, a little bit. Actually, a lot of it. Bitcoin's been holding that 24,000 area for a little bit now.
Yep.
The end of July. A little support. I haven't looked at Bitcoin.
You want to hop over to the to gold real quick? Wanted to talk about that. Yeah, on the 5-minute. Alright, so here pretty much what I'm looking for now, the way that I'm analyzing it at the moment, is price came in all the way up top here. A lot of this is again reaction to the news, right? Now you're looking at the actual versus what we're forecasting, because the market is going to be trying to price in the forecast. So it's going to try to price all that in before the news even comes out. So we rejected that. We got a 5-minute close, and now when I'm looking for any buy opportunities, if there are going to be any, I want price to give me a deeper pullback into these areas and then continue back up bullish from there, and you can look for any buy opportunities. But right now, when CPI data came out, it pretty much showed us that inflation is easing and things like that. Prices are easing a little bit. That does not mean that inflation is not there anymore. It just means that we're starting to calm down now, given the actions that have been taken already, increase of interest rates, monetary policies, money being taken out, things like that. That brings in optimism a bit more on the equity side for investors. So really what I'm looking for here is on higher time frames, more sell opportunities to come back into this 1796 to 1786 zone. So this is why it's very important to wait for price to the candles to close. I'm saying that you can look for scalp opportunities, no problem in that, coming back up, because when you're looking at the overall macroeconomics from a global perspective, there's not too much optimism. Right? A lot of the major economies, they're moving towards recession if they're already not in one. So when you're looking at the bigger picture, if you're looking for swing trade opportunities and things like that, you have those buy opportunities, but from a technical perspective, you need to see some corrective moves. So you need price to come back below 1796 areas, coming back into the zone below 1974, and then grab that liquidity and continue pushing back up. Does that make sense?
Yep.
Any questions about that?
Did I push over here in the 1 minute?
All right.
1802 ended up holding support here. We'll see. And again, we can't stress enough how important it is. If you guys don't trade news, don't get FOMO over this. Just keep journaling like how you can catch these moves. Eventually, you're going to start to gain confidence and start to see the same moves setting up. A lot of times it sets up differently, right? But there's going to be times where you're going to backtest, let's say CPI, PCE, GDP, any of these moves, or NFP, and it sets up almost exactly the way it did back then. Right, like a month or two earlier. And that's where you capitalize because you're so confident in that.
Absolutely.
So iPhone 6 is waiting for, iPhone 6 Plus is waiting for the pullback. Smart.
That bottom wick price pushing up, so essentially, you know, this is your scalp opportunity as you're pushing back above these areas.
You're saying once you get that close above here?
Yeah, now you only have like 2 minutes left, but you know, we talked about that bottom wick and price pushing up, you know, pretty much drew out the candle. That's your scalp opportunity coming up to fill the wick. So I took an entry at 1804.92, and then as price is pushing up, you know, filling up this wick, I'm going to secure something, and then I'm going to let everything else run. Okay. That's a quick scalp right there. And then after that, if price fails to break above this, you know, in the next minute or so, that shows me that on lower time frames, we could probably just see price kind of hanging around here, and then coming back down to correct this massive push up that just happened.
So you're in this?
Yeah.
Oh, okay. Awesome.
But up until price fills this wick, and then I'm going to secure.
Nice.
Basically just legit just trading the market sentiment to the news release.
Yeah. Investing.com is saying that it came out at... Okay. Makes sense. Wow, first time it's been at zero, coming out at zero for the month, base CPI, since November of 2020. We've gotten close, but that was May 2022.
So I just closed a small percentage. I closed about 20% of my trade, and then I moved to break even, or just above break even. The entry was at 1804.92. I just moved it to 1805 flat.
Beautiful.
And now, in order for me to look for another scale-in, I would want to see a break and retest happening above this zone, but at a very minimum on the 15-minute time frame, because we are coming close to that New York Stock Exchange volume. You see that trading view gave you an error?
Did it?
Yeah, look at that right next to trading view up top here.
Oh, yes.
Yeah.
Some users may face slow loading charts and drawings. SharmaFX.
Volatility at its finest.
Oh, yeah. Absolutely. Let's see GJ. Wow. Okay. Why is this not? Just going to make sure we have this. Do that for you guys.
Yeah. Hello?
Is that your net?
Yep.
Alright, I close out of that trade.
Great job. That's awesome. Anybody else take anything?
Yeah, no, I'll be waiting for the new 4-hour candle.
So now we can go back. Fold over here. Okay, so we may get some continuation during New York Stock Exchange Open, and you guys can, you know, trade the setup from that. So if I grab something, that'll be my second trade of the day, and I'll be done after that. But we'll see. All right. Anybody have any questions? How's YouTube doing?
YouTube is good. They don't have a lot of questions there, but we had around like 25, 26 views at one point.
Oh, nice.
Yeah.
We gotta get those cranked up to like 100 at a time.
100%.
You know, big help comes from you guys. If you guys know any family, friends that you know that needs help, like this webinar alone, what we're doing is all basic supports, all that stuff. So just let them know. If it makes sense for them, they'll do it. If not, no. But if they're complaining about their lives right now, if they're complaining about their situation and they're not doing anything about it, be like, I have the perfect solution for you, right? Figure it out. See if this is something that's right for you. If it's not, good. That's fine. But if it is, you may want to, you know, that could be the greatest thing that you do for somebody is just suggesting something to get them out of the situation that they're in right now. This is why GJ tanked Ayasha.
Mm-hmm.
This is the Japanese yen currency index.
Massive strength.
Oh yeah.
The perfect thing too is I was just looking at GJ, it tapped right into that 162 level and rejected right off of that.
Yep.
And that 162 is a monthly support and a weekly support and a daily support. So if you go onto the daily time frame for GJ real quick.
Yep. There we go. Just gonna get rid of all this for you.
So what I have marked off here is this entire level. That price, you know, reacted off of here previously, and then if you go further to the left, like you would see the same exact thing. But we held on to that resistance last couple of days, kind of rejected to close above it. We tapped into it, right, but we didn't really break the highs, you know, the last 2-3 days. We come back, break all these lows, tap right into that 162, right into this area here. tap right into that area, reject it. So what I want to see here is this daily close like this, and then we have PPI coming out. You also have GDP coming out, I believe tomorrow, pre-London session, and then Friday you have the consumer sentiment coming out from the US. So I think tomorrow with GDP release at London, I think this thing can move like great volume. And technically the UK is already in a recession. They've already had their 2 consecutive negative GDPs.
Yes. All right, guys. I think that's good. Unless you guys have any other questions.
We can also go over like the next moves or like setups or anything like that that people want to watch out for in New York.
Yeah. Yeah, I'm looking to see how we end up holding this support over here on GJ, like you were saying. Get this 15-minute price reacting to hard rejection of this area. Can we get some kind of a resistance anywhere in this area to continue down? And we now have a wick to fill if we can break through this support. Now gold is reacting to that level over here that we had marked off to the left on the other chart.
The boot camp is going to be on the 20th at 7 a.m. PST, but the signups, if you guys are not already part of either of our groups, the signups and payments and everything like that is due on the 13th at 5 p.m. PST. After that, we're not going to be accepting any more intakes for the boot camp.
Still not. So let's see, we got that 15-minute candle close above that previous resistance to the left. See if we get some kind of a support formed. And then NYC volume could push us up possibly even more. Do you want to go over US 30?
Yep. Alright, so 33,000 mark that we had. Yep. Perfect. So now what we need to see happening here is obviously there's a strong bullish, candle close coming up in about like 11 minutes or so. We just need price to close above this zone. So we could essentially come back, end up closing right at this level like we did previously. But again, that's going to be an extra confirmation for price to come up and give you a break and retest prior to an entry, which could be quite easy if you're looking at the 15-minute time frame at the New York Stock Exchange open. But you want to be very careful around these levels. Again, this is coming from the hourly and everything like that. So the last 15-minute candle, which is the news release candle, closed very bullish. The new one is continuing the bullish momentum. So it's creating that bottom wick and it's flipping back up, continuing back up bullish. So this is where you want to be very, very careful, because from a technical perspective, this entire move has yet to be corrected. So I'm not saying that, don't look for a trade. You can absolutely catch these trades, these impulse trades, but you want to be very careful when it comes to your risk management. So you want to really pay close attention to candle anatomy here. If you see exhaustion in candles, and we've talked about this many times in our breakdowns, in our simulations sessions and things like that. So I'm pretty sure a lot of you guys would be able to identify exhaustion in candles. If you're not, just let us know, and we'd be more than happy to kind of explain that to you guys again. But make sure that you're watching out for candle anatomy that shows the exhaustion in candle and exhaustion in volume, and then wait for those corrective moves that are going to happen. But there's a very high chance, given that we were expecting a decrease back down to 0.2%, but we ended up getting 0%. So that tells us that there's been a massive shift when it comes to handling inflation, right? Controlling inflation, which is a result of those massive increases that we saw in interest rates the last couple of months, that aggressive hike. So which is a really good thing when it comes to equities. So there's a very high chance that, as soon as New York Stock Exchange opens up in the next 10 minutes, you could see this volume just continuing, and you could take advantage of that, but make sure you're on top of your risk management. Other than that, when you go up to those hourly time frames, the 4-hour time frames, you want to make sure you're looking for your break and retest forming prior to looking for any swing trade opportunities. Any questions about that?
No.
All right, perfect.
Is that daily support? All right, guys. That being said, any other questions? If not, we're gonna head off. And guys, have a great rest of the week. Now you got some volume pumping in. Monday and Tuesday, you stay patient, hopefully. And now, Wednesday to Friday, we should have some nice moves.
Absolutely. And then one last time while we have you guys here, again, if you're interested in the boot camp, you've already signed up. You should have received an email already from me or my team, and you should again by the 13th, if you are interested in the boot camp, to join us. The last day to sign up and the last day to make the payments is on the 13th, which is in about 3 days at 5 p.m. PST. And after that, we're gonna not take any more intakes for the boot camp. Going into next week, there's no more, signing up or anything like that. So if you guys do message us about it, you're probably going to get the same answer, that we're not going to be accepting any more intakes next week. So make sure that you guys sign up by the 13th and, make your payments and things like that. The boot camp is going to be on the 20th. It is going to be recorded. You will receive the recording at the end of it. But you can come and ask us questions, and we're going to go through, the entire basics, all the way up to actual strategies that we are talking about here, that you guys see us taking, day in and day out, pretty much every single week when we're talking about it in our weekly outlook, in our live sessions, in our simulation session, everything like that. We're going to break down all these strategies for you guys and how you can take it too. So going out of the boot camp, really the next day, the next week, you would be able to implement all those strategies and hopefully be able to see results. With that being said, we will see you guys next week. Or are we doing the simulation session this Friday?
Yeah, we should be able to. Let me just double check what I'm doing Friday. Yeah, I should be able to do it Friday.
Alright, so we'll see you guys on Friday. We'll do a simulation session, and I will post about that on the YouTube community tab and also on Instagram, so you guys can follow along the timing.
Sounds good. Looking forward to it.